APLD down 8.1%. This is Friday, the 27th of February 2026. So far, 10.385 million shares have crossed the tape. 50-day average is usually around 31.1 million. Beta is 7%, or rather 7, yeah, meaning that it amplifies the broader market by a factor of 7.2. So if the broader market is down 2%, it's going to be down around 14.4% or thereabouts. Yeah, 2%. If the broad market is down by 2%, it might be down around 14.4%. That statistically, this is how it has traded. Okay, so the stock is back in the spotlight as investors brace for what many believe could be a pivotal moment for the company, a long awaited hyperscaler lease announcement. The stock has become a battleground between frustrated short term traders and highly convicted long term bulls, all against the backdrop of broader AI infrastructure volatility. A major catalyst hanging over the stock is the rumored hyperscaler deal referenced in online discussions as Project Pixel or Lightning. Investors are openly urging CEO Wes Cummins to deliver clarity and secure a transformational lease agreement that could materially re-rate the stock. Many believe that confirmation of a large-scale tenant, potentially a top-tier cloud or AI provider, would validate the company's strategy of building power-dense data center campuses tailored for high-performance AI workloads. Until then, the absence of official news has created a vacuum filled with speculation, impatience, and heightened volatility. There's also the Nvidia and CoreWeave earnings pressure. Okay, Nvidia's earnings were good, but APLD's own when a mix of things. Concerns about tenant concentration risk and broader AI infrastructure multiple compression have weighed heavily on the stock. In short, even strong macro AI demand hasn't shielded APOD from sector-wide de-risking. So you can find more about this. You can look in the description box below and read up. So the stock has been consolidating within a longer-term bullish trend. Its 200-day moving average, which underscores its underlying trend, is sloping bullishly upwards, as you can clearly see. So it is consolidating because you can clearly see here such a sideways movement. But at the same time, a further confirmation is that the moving averages are all okay. They in the short term they are in the right order: 10, 21, and then 40. Okay, but they are all above the 200-day moving average, the longer term moving average. So the regular structure, if you want to see the regular structure, should be that the fastest should be above it. Like for instance, now if they are declining, they're all declining. Short, the moving average, the short, intermediate, and the medium term, they're all declining. They have the right order in the medium term, but in the long term they don't have the right order. They are all above the 200-day moving average. So had it been, they were all these three, the 10, 21, and 40 were all below the 200-day moving average, which is the longer term moving average. There we can see that it is declining, but because we don't have all that order, we can now see it's consolidating. So I know it's a long-tailed explanation. So we have extrapolation is saying that lower prices may continue to print up till Friday, the 6th of March. Then after that, the same consolidation is expected to continue to play out. So this consolidation is a confirmation of what is going on already. So consolidation is what is expected to continue to play out. So projections are saying beginning from the least 16.28, 19.73 to the 5.33, nothing to the upside currently. Before now, there were upper projections. As of Wednesday, we had 37.57, 41.37, 43.74. And notice as well, this is a pivotal projection. This is a pivotal projection. We have observed that a lot of stocks actually come to test their downward pivotal projections. You can see here, this was initiated on last week, the 19th of February, and the algos are still insisting on it. So there's a chance we might print this low of $16.28. There's a chance this is what may happen. So I'm quite afraid that it may happen. But at the same time, we also have it was printed at some point. There was a pivotal projection that printed. Um, it was initiated on the 13th of December. It hasn't done so, and it has no longer it's no longer reiterating that. Okay, so it may come into play at some point as well. So before that as well, before this one, 16.28. We also had 19.20. It didn't materialize, but they're not in play. These two, this one and this one, they're not in play, but they may still become relevant. So it's it yes, like I said, it was printed, it was projected, and it didn't happen. So the stock held up. At the same time as well, this may hold up. It may hold up and not print this as well. But it's important that we point it out. So the 10-day moving average is projecting that momentum might pick up. We don't have that. We don't have that. It's not what we have here on the extrapolation. Okay, it's projecting the momentum might pick up, not what we have here. So let's see what we have on its 21-day moving average, whether it's equally expressing that's the same sort of projection. Let's see on its 21-day moving average. Let's see. Not really. No, they're not. Okay, they're pretty much aligning. Yes, they are aligning as well. They're aligning, projecting that momentum might kick in. Okay, so we have alignment in with between the two moving averages. Let's see whether the 40 and the 200-day moving average will equally do the same. They align. We want all of them to align, but I'm suspecting that one or two may not align because we have seen that the stock is consolidating, and the algo is actually saying that it may continue to consolidate. So there's a chance we might see, but let me not speak too soon and see what they're going to they're going to tell us. Yes, you can see we don't have the alignment. The 200-day moving average is not pointing to the upside. Even the 40-day moving average, they are in the very short term. They're both declining. They're both declining. The 40-day is expected to bottom and level out from the 11th of March, but the 200-day moving average is expected to continue to decline and level out from the 20th of March. So we have a divergence. So yes, this is a further validation that we are looking at a consolidation when they don't align. When the moving averages don't align in terms of extrapolations, then probably looking at we are looking at a consolidation. Yeah. So let's see what we have on its weekly chart, which is a bigger picture, and but it's just that it doesn't. There's so many with the weekly chart. You have so many far points. Too many, the points are too far in between. So you have Mondays. That's what you have on the weekly chart. Whereas on the daily chart, they're all just daily. Every day. A lot more clustered. So let's see what we have on the price pressure momentum. So the weekly chart, let's see what we have. It's extrapolating, a bounce. Okay, weakness for the weakness up till the 2nd of March, and then a bounce towards the 23rd of March. So all in all, the extrapolation is a downtrend. Is a downtrend. Do we have an alignment here? Let's see, up till the 8th of March, 6th of April. I think we do. This is what we have on the weekly chart. We have here lower prices and consolidation up till the 6th of March. Yes, I think it's what we have. Yeah, let's see. Let's go back to the daily chart. 6th of April. Yes, yes, it is. It is 6th of April is somewhere here. 6th of April is somewhere here. Yeah, it is what we have. It is what we have. It's the same thing, pretty much the same thing. Yeah. So there's a chance that this is what may happen. This is what may happen. Okay. So have a look and see what you make of APLD. It's currently trending. Okay, and I'll continue to update you. Thank you very much for watching this video.